for this computer. What's going on, guys? Welcome back. It is Institutional here, and today we're going to talk about how we passed an Ftmo challenge in 2 days, right? So I'm going to go over some of the strategy that we used, and then you guys can take it for yourselves if you want to apply this or don't apply it to yourselves, right? The thing is with Ftmo challenges, we're in limited time. So we have limited time for us to pass challenges. So if you stick to the basics of risking 0.05, you can do it. You know, I used to do it before, but my real reason now to actually pass the challenges is trying to risk a little bit more. And then once you are funded, stick to using low risk. So I'm going to show you guys the account metrics first, so you guys can take a look at it. You know, here is the account we started. We're basically risking around 1% per trade, 1% to 2% per trade. And we had a small dip here, and then we had the big dip above because we're risking that percentage, 1 to 2%. You know, when we're catching 1-on-1s or 2-to-1s, in reality, we just need 10 trades, right? If we're catching 1-on-1s and we get 10 trades right, we pass the account, right? If we're catching 2-to-1s, we just need 5 trades and we pass the account. And it obviously slows it down more if you have that setup that you study all the time, and if you're risking that 2%. So like, let's say you're risking 2% a trade and you catch that 2-to-1, you already made 4%. So we're gonna scroll down here. I'm gonna show you guys basically right here. You can see how for our max day loss, we actually lost 2.5, nothing crazy, but this was actually in a trade that we were holding, right? So I was letting this risk 3%, but it actually went down to 2.5, and then the max loss was $731 for risking, you know, what we actually went down and drawdown. We didn't really have much drawdown. And the profit target here, you guys can see we hit that 10K mark right there. So now if we scroll down here, we can see that our average profit is a little bit wrong. I don't know why it says it was $600 and average loss was $775. So our risk reward here, according to Ftmo, is 0.79. So this is not entirely correct. We're more risking around a 1-to-1, 2-to-1s. You can see our win rate, that was pretty good. We had an 80% win rate on these trades, right? So you can see here for the 22nd of March, we actually made 4.8%. And then for 23, we made 5.1K, and this completed the Ftmo challenge in 2 days, right? We scroll down, you guys can see some of the trades, right? You can see here we took US 30 buy, 5 lot, and we made 2%. USJ 10 lot, and we lost 0.5%, right? XIU gold buy, and we basically paid 0.75%. Here's some sales 0.5. So you can see how they start scaling up, right? And then for this buy, we made 1%. And the big buys here, right? They're not really big trades. You know, we're making 1.2 per trade, 1.5, 1.2. So roughly we're making 1%, 1.5%, 1.2%. You guys can see here, you know, we made in this day roughly 1% here. So we're really risking, we're not passing that 2K mark per trade. Majority of the trades that we're taking, we're going over 1K to 1.3K to even lower. You know, 1.5 is the average medium that we were taking here for wins, right? And the loss that we had, we basically risked 1.7 and we lost that one, right? 1.2, we lost this one. And you can see the biggest trade was the one that we took after, which was a 2K trade on US 30 buys, right? So now I want to go over the simple strategy. Well, you know, the strategy is you could take 2-to-1s, but you can risk 2%, but that's when you're up. So like once you're up 5%, you can start risking 2%. The majority of things that you want to be doing now is risking 1% per trade and going for those 1-to-1s and 2-to-1s, right? There's many times where you guys will see that traders, for example, they will go for the high R's, like they will go for, let's say, at this FVG here, and they'll be going all the way down for this up here, right? And it's not to say that it doesn't hit, because obviously it can hit. But what happens majority of the time when it comes to these levels, right? For example, that we have this OB and we took this entry. Once you see price going higher, majority of the time, this is already a 2-to-1, right? So this we already would have hit take profit. What price will do is that it will come down, make sure that it stops everybody out, even you that you were at break even, and then price goes to your TP. So this is what I've noticed through the extensive research of my backtesting, that 3-to-1s, 4-to-1s, 5-to-1s, they come across as very hard trades to get, because majority of the time, even if you have the best entry possible, right? Even if you took that beautiful FEG right there and price now broke structure, this break of structure right here would have been your 2-to-1 that you completed, and you would have successfully taken that. Or right here would have been that 1-on-1 that you completed, and you would have successfully taken that. So if you can master your 2-to-1s and 1-on-1s, you're more than good to go, right? Once you take it higher than that, this 3-to-1s, that's when it starts getting sketchy, because here, that's when price will most likely come down, stop you out, and then actually continue going. So if you don't understand that, when you're taking the 3-to-1s, you're eventually you become a net break-even trader, or even less a net not profitable trader, right? You'll be losing more than winning. And that's because you're not understanding the way of this markets move, right? When you're getting these 1-on-1s and 2-to-1s, you can get this consistently, you will pass the Ftmo challenge. So I'm going to show you guys Now, a little bit more of the strategies that we took and how you guys can implement it in your trading style, right? So, for example, if we're looking at price and a price here is heading, let's look at USD and a nice easy trade that we took yesterday, right? Let's drop down to when we were in session. And this is pretty simple to take. And this was at roughly, we took this trade at roughly, what was it? Right here, I believe it was 1:40 in the morning. So I'm gonna go over my Zoom real quick so I can show you guys the trades here. And I'll explain them to you guys in a second because I forgot where they were, but I did share them to my Telegram chat. So let's go over here real quick. Let me pull up the Zoom, the Telegram, sorry, and then let's go to our Instagram. I mean our Telegram, sorry. So here, if we go to Smart Money, we can go down. If you guys are not in Telegram, make sure you guys join it. And we can see here, right? So this was a simple gold trade that we took. And again, this is just simple strategy based, and this was a 2-to-1. And then here was a simple ERUSD trade, and again, a 2-to-1, right? So let's go over both of these trades and let's explain to you guys basically what I saw, right? So if we look at this trade, this was taken at roughly 315. So let's go to this was gold. Let's go to gold and let's go to 315 first. Scroll all the way here. Let's go to session, 14 minutes here. And this was at roughly 315. Right? And let's remove this candle right here. Replay right there. Let's now scroll down to M15. So if we look at M15 and we're looking at structure first here, we can see that no structure is actually breaking, right? So when price drops down here you already, to begin, you have that M15 OB. So once you have the M15 OB, you start writing these things down, understanding what does price actually want to do. You know, does price typically here want to drop down lower? If it's not breaking, you guys can refer to my other videos. If it's not breaking M15, M5 structure, you can continue on with price. So once I drop down here to M5, I saw that here this M5 again, you can scroll this a little bit lower. We have this nice and easy M5 OB, right? So we have this nice and easy M5 OB right there, right? Plus this FEG right there. So it's as simple as just following structure. You know, you're following structure, looking at this FEG, and all I was looking for this entry trade, because obviously we have to look at price now. What is price doing here on smaller time frames? Well, if we look at smaller time frames here, there's our big impulse, our higher low point that says higher high. So once the structure breaks or once the structure is holding, what we're looking for when price comes down to that strong level of demand, we're looking for a break of structure within smaller time frames. So what does that mean? That means this, right? If we're looking now at an M1 here, you can see how here we have supply, right? Here rejected again supply from this FEG. And here we're again rejecting out of this FEG here, drop down lower. Here again, we have a new supply zone. We're respecting that, drop down lower. What does price do here? It then drops down again, gives us a new found supply, drops down again, gives us a new found supply, right? Once price breaks this, once price gives you this clean break, all you're looking for is, all right, where is the FEG now that I can capitalize from that is basically showing me that price from here wants to continue going higher, right? So if you look at price here, what do you have right here? Well, right here with this wick, we broke out of structure. This wick, we broke out of these supply zones. So let's disregard this. Let's just take this off. Let's not confuse this more than it has to be. And let's just look at M1 structure, right? We don't need all these fancy boxes. You don't need that, right? Let's just look at M1. If we look at M1, what is price doing here? Again, we have this found low points right here. You have this found low point right here, right? This low point to this high point, right? And here we're making structure. So we have lower high point, lower low, lower high point, lower low, lower high point, lower low, lower high point, lower low. And here we have that break of structure right there. Once we have that clean break of structure, now you can guide yourselves, okay, what do I want to do here? Where is the structure that's showing me an FEG that I can take my model from? And when you go to M4, here's where it was. So all I did here was it took our FEG, take your FEG here as well, right? Boom. And as soon as that opens up, take your entry, stop loss right below, make this a 2-to-1 right there, right? And boom. And this is the thing, right? If you want to have a conservative stop loss, like let's say I was to take this trade and I looked at M1 and you're looking at it like this, I would never do this. I would never risk my stop loss. I would prefer having a bigger stop loss like this and make them, well, sure that it's 2-to-1. Because like this, I have so much breathing room. I have enough breathing room to understand that if price wants to drop down here, right, all the way down here, it can. And it still wants to stop us out, right? So it could break this. and continue breaking. And how many times has it happened that you have a nice FEG and it wicks it all the way down here, and that last tick then it continues going higher? Well, guess what? If you're using my strategy, doing that 2-to-1s and 1-to-1s, all you have to do is, instead of using, let's say you were here at M3, right? And let's say you want to put stops here. Majority of the time, it will stop you out there. So what you want to do is, instead of having that 8-to-1, which realistically speaking, majority of the time it won't hit, you drop this all the way down and make sure it's a 2-to-1. You're risking the same amount, but you're having more breathing room and now making sure that you actually hit that 2-to-1, right? And let's say you want to be more conservative, right? All the way down here. Look, price needs to drop all the way down here, completely breaking every single time frame structure, and it still hits that 1-to-1, right? So even if you were to get worked out here, even if this OB was supposed to be, let's say, a fake out or an inducement and price drops down here, you still have a chance to hit that 1-to-1. But when you're being more conservative, that's when you can actually get stopped out of the trade. So now that we covered that trade, right? Simple M5 structure, low point that led to this high point here, right? Wick rejections, price break structure in the M1. We're looking for FEG. We tapped into it and we hit that 2-to-1, right? Perfectly fine, perfectly balanced, simple strategy that we look for. Now, let's say that we go to EU. Same thing, right? Same thing. We're following the trend. So if we go back here now to EU and we look at this time frame here, where are we? Let's go all the way up here to 2. And here's where we took it. So if we look at this again from M5 scope, let's make sure we delete this here. Right here, right? And again, well, what are we looking for here with M5 structure? Again, if we look at M5 here, what do we have here? We have, again, lower point, but let's say high point. So all we're looking for is where the equal highs here. To me, here where the equal highs are. This is where I see the liquidity, right? And this is FEG that I see that price most likely might hold. Because a lot of people in these overbought conditions, they're going to want to be doing what? They're going to want to be selling. People always think that they can catch the top. People always think that, okay, this is the top or this is the bottom, and price is most likely going to continue to drop. Well, guess what? If M5 is not breaking, I don't take it. So another thing, if M5 were to break here, right, I would make damn well sure that it did break. Like I'm not going to get picked out here. I need to make sure that we make a lower high point, then a new lower high point, and then from there, I could potentially take that sell to now either drop down to M15, H1, H4, whatever. You can refer to my videos to understand what I'm talking about when it comes to applying every single time frame to one. But for example, for this video, when you're applying higher time frame structure, smaller time frame structure, if smaller time frame structure is not breaking, you can still capitalize on it, right? Not every top is going to be the top. People are going to always be wanting to expect price to drop. And if it's not dropping, guess what? It's continue going higher. And you, as an SMT trader, understanding that structure and liquidity comes first, you can capitalize on these longs. So here in M5 structure, again, all you got to look for is a break. So when we're looking for this M1 here, I'm looking for an M1 break because M5 structure is still bullish. So if you look closely here, I mean, it doesn't get easier than this. It does not get easier than this, literally. You can see how here we have M1 structure, right? What do we have there? We have a nice and easy break of structure. Price goes up higher. What do we have there? We have an OB right here, plus an FPG that you could capitalize from. So you can definitely just take that right there, wherever you would like to. Just take that trade, be happy, end your day, right? And all you're gonna do again is pull your longs here, right on top of the FPG, right there. And TP where? TP right here, right? And now, what are you aiming for, right? Could you have stops down here? Yes, right? There's a 4-to-1. Would I do it? No, because majority of the time it will stop you out. So what do I want to do in this case? I want to make sure that one, it's at a 2-to-1 where I feel completely safe. But let's say that I think that maybe it might give us an inducement. You could move the stops even lower, all the way down here, and you still have a 1-to-1. And again, if you want to pass a challenge without automated trading, just your own style, these 1-on-ones are very easy to catch. And it just takes 10 of these 1-on-ones that most likely people as SMT traders, they never want to take these type of trades. They always want to go for the big R's, 11 R's, 20 R's, all these crazy shit that you guys see in trading. That's not realistic at all, bro. Those traders are not profitable. They're not doing it. They're giving you guys bullshit lies. They're going down and they're going down and back testing and just making sure that they understand what they're taking it day in and day out. But these trades do not happen. Any profitable trade that there is, they're taking maximum that I see, 3-to-1s and 4-to-1s, right? And these are already the traders that are just really good at understanding the market. But if you're just starting off, or if you're actually seeing something better, trust me, start with 1-to-1s, and then if you want to scale it up higher, like I do now, take those 2-to-1s. 2-to-1s are the safest trades possible, and you have a lot of breathing room here, right? It has to break what? It has to break out of this FVG right here, and it has to break out of this OB right here. And even there, I could even lower a little bit lower, right? You can always take a little bit lower, like 1.50s, 1 to 50s, or 1.60s. It doesn't matter. As long as you're hitting those TPs on a consistent basis, you will become that profitable trader. It's just as easy as understanding where's my structure. If small term structure is not breaking, then I look for M1 breaks, and then I can capitalize on that. Now, if we are breaking out of small term like M5 breaks, I'll be looking for M5 continuations, and from there, I can continue looking for M15s. But it's just as easy as that, right? It's a pretty simple strategy that you guys can follow. It's just understanding SMC as a whole. Where's the liquidity? Where am I looking for structural breaks? Am I following small time frames? And if small time frames are holding, can I continue following that? If small time frames are breaking, now I'm going for the bigger time frames to hit that level, and then I'll continue going on with the trend, right? So let's clarify that real quick so we can just have a simple strategy on what I mean. Let's say that we are looking at let's say that, sorry, let me get something here where we can make this a little bit easier. Where is where is this, bro? Do you guys not hate when you lose? Like fuck, I can't even say what it's called. When you lose the tools that you want to use, right? I hate when I lose tools that I'm looking for. It really gets me like frustrated. I'm trying to find, here it is, path, right? So let's say that, keep it simple strategy, right? Let's say that we have a big displacement like that, right? This is displacement like that, and this is, I don't know, this is H1. This is H1 trend right here, right? H1 right here, boom, right? Here's your H1, and here is your H1, right? This is my strategy. And if you guys don't believe me, I mean, you guys can go on my lives every day. We do this shit every day live on YouTube, live trading, no bullshit. So here's my H1, right? Now, let's say that as a retail trader, you're going to be looking for that double top here, right? You're going to say, oh shit, double top, price is going to drop here. As an SMC trader, you're going to say, hell no, we're going to target that double top. This is like fucking La La Land for me, and I love this. This double top, I'm going to make damn well sure that it grabs this. And then from there, maybe I can go for some shorts. But for that time being, this is my La La Land for me, right? This double top right here that we see in the past is going to be La La Land right here. This is cannon for us. We want this. We want this to target this, right? So what I'm looking for here, if I'm looking at structure, I'm looking for first either M15. Let's just drop down to M5. This is M5 structure, right? If this is holding here, this M5 structure is holding here, right here. All I'm looking for is a M1 break. And once that M1 breaks here and the smaller time frames, right? Like let's say we have a M1 now is dropping like this, right? Something like this. Shit, I can't even make it where I want to do it. Something like this. And then we have an M1 break like this. Once I get that, I'm looking for this. And then I'll continue on with the M5 structure, right? Because we have here the H1, here we have the M5, and here we have the M1. I'm looking for that break of structure, and then I continue with the long, right? Now, let's say that in this case scenario, right, this doesn't happen. And this double top, for whatever reason, it does hold. Or let's say that we actually grabbed it, right? Once we grab this, now we can be looking for the short. So once we're looking for the short here, what are we looking for? We're looking for an M5 break. So once this M5 breaks here, this M5 breaks right there, then I'm looking for a new leg of structure. I'm looking for this to happen, this, and then I continue looking for that short. Because here, you're already getting context on this M5. That price is dropping now to what? To either H1 or let's say M15, whatever structure you're getting yourself from, you got to make sure that you understand what is price trying to rebalance. Does it mean that price is bearish now? That's where people get confused. No, because people most likely here, they're going to want to continue looking for that short because price here is showing them bearish signs. Well, guess what's going to happen here? Once it drops down to this H1 time frame here and this strong demand, then you're looking for the same thing. You're looking for now an M5 break. And you're completing this, right? You're completing this whole damn move that the market is. The market is literally like a small algorithm. You're completing this. Let's say this is the M5. You continue going now. And again, let's say that here, what's going to happen majority of the time here when retail traders see this? They're going to be like, oh shit, double top, again, double top, La La Land. Let's get in this short here. Well, you as an SMC trader, when you're looking at the M5 structure and it's holding, you're going to continue looking for that long, right? Or M15, whatever it is that you're going to do yourself. But again, this is a complete MMXM that you literally get every single day and every single time. Your price will drop down, grab the liquidity, do a complex pullback here, and then from there continue going higher. Or once it grabs the liquidity, then continue going lower and continue on so forth. Price is just boxes of liquidity. You want one to grab, continue with the next, and then continue just going like that, following higher time frame and smaller time structure combined into one, right? So I hope you guys did learn some nuggets here. I mean, these are some free nuggets that a lot of SMC traders will not teach you. And people just bullshit here, man. I'm telling you guys, don't believe these traders that are telling you to catch these 11 R's, these fucking 30 R's. I do it myself too. Sometimes I'll be sharing stupid shit on my Instagram, going over trades or some trades that you could take like some of the setups, but bullshit, man. Those trades are not possible. The trades like the 11 hours that we take are trades that you could take once in a while, but it's very rare. And if you're taking those trades, make sure that you're high up. Like if you want to take an 11R, take an 11R when you're up 10% in live account and whatever. You're up 10% in funded account and you don't care. You're taking an 11R because let's say you have that payout the next day, you don't mind if it hits break even. But how painful will it be to be up 8R and then your trade goes all the way contrary and you hit your break even, right? That really fucking sucks. Like this type of trading style gets in your brain. It gets in your mental strain, and you start becoming unprofitable. I can tell you guys from experience, right? When you're looking at these trades and you're taking these 11 hours, 5 hours or higher, and you're up and your TP is about to hit and it goes all the way down, you start doubting yourself. You're like, damn, why didn't I close early? Why did this happen? You start chasing the market because you're not profitable or you're not consistent with these 2 hours, 1 hours that are literally so easy to take. So yeah, guys, I hope you guys enjoyed this video. I'll see you guys in the next one. You guys know how it goes. So, trade or leverage stick trading, and peace.